Do catch the full interview at 6:10. On the currency front, the rand is battling against the buoyant dollar as the jury is still out on what exactly the Fed will do, while Middle East tensions have also come into play. Manqoba Madinane, fixed income and commodity strategist at RMB, joins us with his outlook for the local unit in the fourth quarter. Thank you so much for your time, Manqoba. Now, are we actually seeing risk assets on the back foot amid the Middle East tension escalation?
Yeah, certainly we are. So there's been over the past few days a wave of risk aversion. So that has impacted the emerging markets, like currencies in general. But the rand has also responded to that. Losing some footing, as you said. Yeah.
I mean, listen, it was on solid footing in September, and a part of that focus for the last few weeks has been the stimulus package that was announced in China, what you would say a bazooka-style stimulus. So let's talk about, just the impact of that rally on the rand. Is it still, priced into the rand as you are seeing it? Is it still reflected in the rand, or has it fizzled?
I certainly do believe that it is still being reflected. So what we are encountering right now is a weakening wave in the rand, but we remain of the view that over the medium term, the rand will likely rally. So the current environment is reflecting the risks. China, I'll be careful to call it a relative bazooka,
okay.
because they have done a lot more. The kind of packages that they are talking about are not what we've seen in the past, but nevertheless important for sentiment. So commodity market sentiment has lifted. The rand being a commodity currency will respond to that. So importantly, in light of that, the gold prices have also responded, giving the big retail interest within China, right? So this is important for the rand outlook. So we've seen quite a material uplift over the past few weeks towards the 2,700 an ounce level. So that directional momentum is supportive for the rand. But for now, the other factor that the rand is responding to is the US dollar. So there's been a repricing of interest rate expectations with the 50 basis point rate cut scenario for November now seen as being less likely, given signs of relative resilience in the US labor market. But of course, the more important number with regards to that is the NFP number, which is due tomorrow.
What are your expectations on that, actually? Firstly, it's actually quite interesting that the rand would also weaken with less expectations of a 50 basis point cut, when we know that we're still going to get a cut anyway, a 25 basis point. But it's quite interesting how markets work. But let me just redirect again the NFP. What are you expecting from that tomorrow?
Yeah, look, the signs so far are that the US labor market is holding up. So I think rather than the NFP number itself, I think what is more important is the unemployment rate, right? Which spoke to the Fed, right? Post the July FOMC. So looking at the data points that we've had this week, being the ADP, being the jobs openings, they suggest they all printed with the upside surprise, right? So that suggests that the weakness in the labor market that the Fed is really worried about may not yet be reflecting in the underlying macro. So I do expect the outcome to be in line or close to market consensus expectations, which is a 4.2% unemployment rate. I would be surprised by an upward breach of that rate. But in saying that, I think we have to always remember that the Fed is actually worried. They are modeling an increase in the U.S. unemployment rate to 4.4, rate.
Yeah.
So why that is important? They think that the equilibrium level of unemployment in the U.S. economy should be at about 4.2. So with any rate above that measure will basically embolden expectations for a larger cut.
All right. Well, we will be combing through those numbers tomorrow afternoon. Thank you so much for your time and for just giving us more detail on what we're seeing there on the Rand movement so far. That was Manqoba Madinane, fixed income and commodities strategist at RMB.